Hi, I'm Paul Gorrie from the Navigator Network, the reigning Australian Firm of the Year with Now Infinity Group, consisting of over 300 accountants and financial planners. The purpose of the clip is to fill you in on the main changes proposed in the budget of 2016, handed down in May 2016. The three areas I will focus on here relate to superannuation, taxation and small business. Firstly, let's look at the many changes the government has proposed in relation to superannuation. If you would like more in-depth information regarding the superannuation changes, I've done a separate YouTube clip to look at all the changes in more depth because the changes were many and far sweeping, much more than the super industry were expecting. The first change relates to the amount of concessional or tax deductible contributions you can make to your super fund from 1st of July 2017. From this date, the concessional contribution caps will reduce for everyone down to $25,000. This is a reduction from the current contributions allowed, which are $30,000 for people less than 50 years of age and $35,000 if you're 50 years of age or older. The next change starting from 1 July 2017 will be the ability to carry forward unused concessional contributions for up to 5 years as long as your superannuation balance is less than $500,000. Next, from the 3rd of May 2016, which is budget night, there will be a lifetime cap for non-concessional contributions of $500,000. This lifetime cap will also take into account all the non-concessional contributions made from 1st of July 2007, which is apparently the date that the tax office say they have reliable contribution records available. And if you exceed your cap from this date until budget night, you have deemed to have not exceeded your cap but fully utilised your $500,000 lifetime cap. The lifetime cap replaces the current non-concessional limit of $180,000 per year for those people who aged less than 65 years of age. Next, from 1 July 2017, the contribution eligibility requirements for those aged between 65 and 74 years of age will be removed. This will allow people who are under 75 years of age to make contributions to superannuation without the need to pass a work test. Next, again from 1 July 2017, there will be a $1.6 million superannuation transfer cap introduced. This transfer cap will be introduced to restrict the amount you can transfer from your superannuation or your accumulation balance to your pension account. Any excess that is maintained in the accumulation balance will attract a concessional rate of 15% as opposed to a 0% tax rate to the cap pension earnings. Next, from 1 July 2017, the current Division 293 tax, where an additional 15% tax applies to superannuation contributions will apply, will be reduced to income exceeding $250,000 from the current level of $300,000. Again, from 1 July 2017, the transition to retirement pensions earning tax exemption will be removed. The current tax exempt status of income from assets supporting a transition to retirement income stream will be removed and earnings will be taxed at 15%. as opposed to the current rate of 0%. Next, from 1 July 2017, the current spouse superannuation tax offset income threshold will be increased from the current level of $10,800 to $37,000 for the spouse's income. Also from 1 July 2017, the anti-detriment payments will be abolished for lump sum payments made to eligible beneficiaries when a member passes on. Also effective from 1 July 2017 will be the ability for all Australians who are less than 75 years of age to claim a tax deduction for super contributions regardless of their employment status. This is a good outcome as opposed to having to pass the current work test. Wow, there really have been a massive amount of changes to Australia's superannuation system. Now to some other budget changes. Taxation. The company tax rate of 30% will be reduced to 25% depending on the turnover of the business. Currently, small business companies, and that is companies with a turnover less than $2 million, from 1 July are paying a company tax rate of 28.5%. For individuals, the budget increases the personal income tax threshold from 1 July 2016 from the current level of $80,000 to $87,000. This measure is being implemented so taxpayers do not experience bracket creep and will result in certain taxpayers saving a maximum of $315 per annum. So not a lot of changes in relation to taxes. Now to small business. Thankfully, there have been some positive changes to those businesses who are classified as a small business. Effective 1 July 2016, the small business entity turnover threshold will be increased from $2 million to $10 million for the purposes of accessing certain existing income tax concessions. This will allow more business entities to gain access to the small business concessions, such as the immediate tax deduction for asset purchases costing less than $20,000. That's up to 30th of June 2017. Then for assets up to $1,000 after that. Simplified trading stock rules, simplified method of paying pay-as-you-go instalments, and the option to account for GST on a cash basis. This change does not, however, extend to the ability to access the existing small business capital gains tax concessions, unfortunately. Also from 1 July 2016, the unincorporated small business tax discount will be increased in phases over 10 years from the current level of 5% to 16%. The discount, however, will retain the current cap, which is $1,000 for each income tax year. Lastly, the government announced that they will modify the very complex rules that relate to private company loans after it consults with key stakeholders. Whatever changes that occur in relation to these loans will start from 1 July 2018, so watch this space. That's it for the main changes in the budget and how they affect you. If you have any questions in relation to these changes, give us a call on 0755 970 661 or email us at cpa@navigatornetwork.com.au. This is Paul Gorrie from the Navigator Network signing off.